Hey everybody, Tyler here from Equities Lab, and today we're going to be going over value investing, or how to invest like Warren Buffett. Turning just $10,000, though when adjusted for inflation becomes more like $100,000 from pinball machines, into a billion-dollar business. He's one of the most successful men in the world and one of my idols when it comes to long-term investing, because that's really all he does is investing for the long term. Now, what is value investing for the person who's never heard of it before? Value investing is looking for companies that are undervalued, companies that have a share price that is lower than the company's intrinsic value. You then buy these companies and then over time hope that the share price is going to increase to the intrinsic value of the company. So, how do we find stocks that fit this profile? Through screeners. And we can do that all within the Equities Lab platform. So what are we looking for in a value stock? Well, in this very basic, very simplified version of a screener, we're looking for any stocks with a market cap over $50 million, which is a fairly low market cap. We're looking for companies with the average volume within the last 10 days over 250,000 shares. This means that these companies are going to be liquid. Today, tomorrow, week, a month, whenever you want to get out of this position, you're going to be able to get out. That is a necessity when investing in companies because you want to be able to get out. And then the close needs to be greater than $2.50. You don't want anything that's like sub-penny, under $1, yada, yada, yada. So this is just basic. And when we go ahead and search for this without using our max holdings, we get over 2,000 results. We get 2,269 results. That is too many results to go ahead and sort through. So what we do is we go ahead and add a max, and we sort it by ranking. Ranking is a variable that we created here in the system where we take the FCF yield, PE, price to sales, and EBITDA over enterprise value, and we add all those values up. We add the ranking. So where does the FCF yield rank for each individual stock? We add that up, and after we add it, we go ahead and apply that to each individual stock. Now, when we order by, we take the 20 stocks with the highest value of these four items added up. So if we go to HPQ here, it has a ranking of 381. If we go to Hornbeck here, it has a ranking of 367. So these are pretty high rankings. So where do we go from here? Now you want to go into each of these individual companies and do some more analysis. This is just a great starting point. And at that point, you can start figuring out which companies you actually want to invest in. But how do we know if this strategy actually works? Well, we can backtest it. We can check over the past 15 years how well this strategy performed. And as you can see, we made a massive amount compared to the S&P 500. This green line right here is our return over the past 15 years, while this brown line right here that looks almost flat is the S&P 500. The S&P 500 since the year 2000 has made 88% total, with an annualized return of 4%, while our strategy, has given us a total of 4,628%, or a 27.14% compounding annualized growth rate. It's pretty fantastic. Now, we do have a slightly higher standard deviation of 8.3% monthly versus the 4.84% monthly that the S&P 500 has. But when you're making such higher returns, you're going to need to expect a slightly higher standard deviation. Now, it does seem here in May that the strategy may have stopped working, or less stopped working and more just kind of started to lose some money. The market's been fairly weird this year, so a lot of strategies have started to kind of work a little differently. But when we log scale it, you're able to actually see a little bit better representation of what's currently happening in the strategy. And as you can see, it's not that big of a drop. If it was looking like 2008, where even in log scale you're getting this steep drop, it'd be something that you should be more worried about. But in the long run, getting in now and starting to purchase and slowly accumulate these value stocks and holding them for a month, a year, a quarter, however long you want to hold them, is going to put you on the right track to becoming a value investor and getting these high returns. But not only that, you're getting a company that actually has an underlying value. There's tangible value in the company. There isn't speculation, there isn't future projections, and you're not working on momentum or anything. I mean, some of these things, other things work great when it comes to investing, but this should be a staple, a center stone in your long-term portfolio, because it's been around forever and it's not going anywhere anytime soon. So again, check out Eric's article. Link is in the description. Check out our website. Subscribe, like the video. Thank you all for watching. I really appreciate it. I hope you all have a fantastic evening, and I hope you learned something in the Value Stock Screener video. It's time to start investing like Warren Buffett and become as successful as he is. I'll see you guys later. I hope to see you on the next video. Goodbye.